Jonathan Silber, Managing Director of investment management firm Clarity Capital, joins us now on Skype from New York. Mr. Silber.
Thank you for having me, Benjamin.
Thanks for joining us. How did markets react to the iPhone 6?
Apple stock initially went up by over 3% before falling back to end the day virtually unchanged or down slightly. The initial price run-up reflected Apple's meeting the great expectations for the new iPhone. Apple had been playing up these expectations, implying the new iPhone would revolutionize the industry, and actually holding the introductory news conference for this iPhone in the same hall in California where Steve Jobs, back in 1984, unveiled the original Mac computer. So expectations of a significant announcement were certainly in place. And the iPhone 6 was seen to have largely met those expectations. There was an improved processor, up to 25% quicker than the prior ones, well-publicized bigger screens, 4.7 and 5.5 inches, better camera, and also a new mobile payment system, Apple Pay, that could bring a new and recurring revenue stream to Apple.
Okay, so why did Apple stock go back down if the iPhone was seen as such a great product?
That's a good question. Apple stock declined, I believe, in sympathy with the overall market, which sold off pretty aggressively in the last few hours of trading, largely as a result of expectations of future interest rate increases. So really nothing to do with Apple stock per se. And parenthetically, shares of Apple have typically traded lower on the days that the new iPhones have been announced. The past 6 announcements has seen the stock trade lower by an average of just over 1% on each of those days. So ending the day essentially unchanged is not too bad of a result.
And how do you imagine, considering all this hype, the iPhone 6 will shape Apple's price in the future?
Like every stock, Benjamin, Apple's price level comes down to its earnings. And early signs are that the iPhone 6 is going to lead to a reasonable boost in these earnings. Historically, iPhone sales account for over half, around 53% of Apple's total revenue. So the iPhone success is crucial to the Apple's bottom line.
Right.
And the new iPhone 6 is really unlikely to disappoint in terms of sales. It comes in the face of lots of pent-up demand. Many consumers have been waiting quite a few months to get their hands on the iPhone. I know my kids have. And for investors, this launch date of September 19th, next week, will provide crucial information as to consumer interest. Namely, will people literally line up to buy the new iPhone in higher numbers than prior years? Now, last year in the launch of the Apple 5S and 5C, I think about 9 million units were sold. Investors are going to be looking for more than that this year, probably closer to 10 million units.
Okay. I mean, some analysts have said that the bigger size is sort of reminiscent of the Samsung. What new features of the iPhone 6 could spike interest? I mean, what is it that people really would bring people to the market?
Sure. I think the new Apple Pay system, the new mobile transaction payment system, is intriguing. It has convenient features like one-touch checkout. It has deals with Visa, MasterCard, American Express, a host of large banks and stores. And investors are going to be looking at a couple of things there. Can Apple Pay create and maintain a new recurring revenue stream through their new mobile payment system? And equally or more important, what segment of the significant mobile electronic transaction market can Apple truly capture?
Okay, for a final comment from you, what are, and if there are any, downside risks for Apple and for the markets?
There certainly are downside scenarios. For one, as you know, the smartphone market is extremely competitive. The new iPhone is the late entry into the market, and it's certainly no sure thing that Apple can reclaim users that have been using larger screen smartphones like the Samsung. Secondly, there's now a big buzz and excitement about the iPhone. That can certainly be cut short, and people can go and choose to buy cheaper, older versions of the iPhone and save some money. Finally, as has occurred sometime in the past, there could be a backlog for the new iPhone that can cause significant delays in iPhone delivery. So that would certainly create a negative drag on the stock. But ultimately, Benjamin, Apple stock is going to boil down to expectations. And for fiscal year 2015, median estimates of earnings per share range between $6.90 and $7 a share. Apple needs to at least match, but more probably beat that in order for its market valuation to increase. And beating those lofty expectations is certainly not going to be easy.
Fantastic. Well, Jonathan Silber, thank you very much for joining us on the show from Clarity Capital from New York City. Thanks for giving us a sense of where our expectations will lead us with Apple.
Thank you for having me, Binyam.
Thank you.